From 2018 to 2024, tech companies have generated over $100 billion of value in the region.
The winners, they win for longer and they win bigger. It isn't just about your ability to capture really great margins, but it's also your ability to leverage the fact that there's low competition in adjacent markets and go on to conquer those adjacent markets and actually build businesses that are much, much bigger here than they could be in any other country in the world. We've been able to show that we can deliver more results with less capital, and these are not paper results, these are realized results.
LatAm does it best. Great to be here with you guys. I'm headed down to Brazil today, actually. So by the time we publish this, I'll be in Brazil, which is, I think you guys are releasing this on, we're recording this on a Monday, releasing on a Wednesday. I want to start by exploring the most famous index from your report. It's the window into the Latin American tech world for a lot of global investors, because sometimes it's hard to kind of really understand the potential of the region if you're not familiar with the market. And as we, on the fund side, as we talk to different LPs that are less familiar with the region. So you've got the Atlantico Digital Transformation Index. Could you talk more about how the index changed from last year's study to this one and what that means for Latin America's tech potential in terms of value creation in the technology space?
Yeah, I mean, it's interesting to look at it from a historical perspective. So we do this index every year. For those who don't know, we're basically taking the tech market cap, so every single tech company that's publicly listed, right? And we're comparing that to the GDP. So it's basically a proxy of how much tech contributes to the economy of any given country or any given region. So we've done this for 5 years, but we've gone back up to the 2000s. And so maybe the best kind of historical way to look at this, and when this really started to change, was about 2018. And so from 2018 to now, Latin America went from a little over 1% of tech market cap as a percentage of GDP to over 3%. So a little bit under 3%, but Brazil jumping ahead at 3.5%. So it seems like the numbers are small, but actually when you look at it from an absolute perspective, what that means is from 2018 to 2024, tech companies have generated over $100 billion of value in the region. And that's despite kind of the 50% drop in all the equity values that we saw in 2022. So even if some of that value got erased during the ups and downs of the market, we're still saying that $100 billion were created from tech companies in the region, which is a lot. And I think we always try to bring in a comparative set to see kind of how we stand compared to other developed markets and emerging markets. And so for reference, so LatAm is about 3%. India stands at 18%, so we're about 15 years behind India and China. China stands at about the same, but growing at a slower rate than India. India had a lot of tech IPOs this year. But another interesting data point that we are seeing is that we're starting to see the same kind of value concentration that we've noticed in developed markets that have a longer history of tech IPOs. So if you think about the US, for example, the Magnificent Seven accounts for about 65% of the tech market cap of the United States. And when we think about Nubank and Mercado Libre, which are obviously kind of the big drivers of tech growth in the region, they represent today about 80% of that total market cap. So as the pipeline of unicorns in Latin America, they start to, flow towards exits and we start seeing more IPOs, perhaps this level of concentration will spread out amongst more companies, but we'll still expect the value to be concentrated in the big winners. That's been the trend that we've seen in the economy as a whole, but also in tech and even more accentuated in tech. So that was something interesting that we brought this year. But I think this dynamic, the speed, the magnitude of value creation that we've seen over the past few years is what sets up the theme of the report this year, which I don't want to spoil it, and we're going to talk about more in the podcast, but excited to.
Spoil it. We want to know.
LatAm does the best. That's the theme. That's always the theme this year, is like the explicit theme.
What do you mean by that?
So I think what we try to explore in the report is that this is a really hard market for you to operate, right? So the level of complexity of the market, there's a lot of things that we have observed being on the ground, but also investors have seen throughout their years investing in the region that are difficult to go around as an operator, as a founder, as an entrepreneur, right? But once you do get around those, you see this magnitude of value creation that we're talking about with Mercado Libre, with Nubank, the level of just the lower competition and the higher barriers to entry when you think about these challenges means that the value creation is really, really high. So when we say LatAm does it best, that's what we mean, right? It's when you get through all of those challenges that we all know very well being here on the ground, the prize is really big. The prize is big, it's resilient, it's why we're here and why we're spending so much time in the region.
Probably one of the reasons why there's just such strong incumbents also, right? Is that kind of something where you've got these big companies, the Ambev, InBevs of the world that, generates so much value and then they kind of run away with the value, where maybe in other markets there's, more competitive dynamics. Exciting stuff. So in the report's opening, you'd mentioned how an environment with constrained human and financial capital naturally limits the amount of competition. So kind of getting to that point that I just mentioned, these winners are capturing larger market shares from what you're seeing. How do you see these constraints playing out in the medium long term? What can we expect?
Yeah, and I think that we've all heard these stories about these big successful companies. You listed Ambev, for example. We actually include that as a historical example. But I think that the key takeaway here is that we believe that in Latin America, the market dynamics trump the market size. And I think that yields to bigger investment outcomes and bigger successes for the companies. And what we see is that if you're able to overcome all of these challenges that Anna mentioned around tax complexity, high cost of capital, scarcity of talent, and so on and so forth, that the winners, they win for longer and they win bigger. And win for longer, we show some data that actually shows how the leaders of the market have been resilient in terms of the percentage of the market cap that they dominate. So we definitely see that over the last quarter century. And then when we talk about win bigger, if you look at returns and whether that's return on equity of banks and insurance companies, whether it's returns on capital for oil and gas, whether it's returns that telecom companies have, basically across all sectors, you see the winners having a higher market share and much higher returns. And I think it's not surprising that also when you look at the investor side and you take some of the sort of great investment firms that have been active here, just to give you a few examples, Sequoia Capital, probably one of the best venture capital funds in the world, has had one of its best investment returns of all time in Nubank in Brazil. General Atlantic, again, one of the best growth equity investors of all time, has had one of their best investments of all time in XP Group in Brazil. Same thing goes for Bain Capital on the private equity side with their Intermedica investment. I think GIC, the sovereign wealth fund, with their Regidor investment. So you've seen time and time again, these global world-class investors actually having one of their best investments of all time in Brazil, which I think also makes it much more tangible what the data shows. And I think that there's a couple other things that I want to mention on market dynamics that I think are key. One is, as Anna talked a little bit about this notion of the Magnificent Seven and the concentration of value creation and value capture that you have in tech. I think that there's this dynamic of tech where the winners win bigger, right? So that's kind of a global tech phenomenon. And then you compound that with the fact that expensive and scarce financial capital, expensive and scarce human capital in Latin America means that you're able to command these scarce resources. You're also able to win bigger and win for longer. I think means that the outcomes here in technology in particular end up being even bigger. And I think we also introduced this year what we believe is kind of our great triad of companies in Latin America, the companies that we're calling the triumphant three, because they've been able to triumph through all this adversity and create these world-class technology businesses. And those are Mercado Libre, Nubank, and iFood as sort of the three great pillars of companies that are world-class in what they do. Mercado Libre as one of the best marketplaces and financial services ecosystems that's quite unique around the world. Nubank as the world's biggest digital bank, and iFood probably as the best food delivery and delivery company in the entire world. So we try to go deep also into how the region ends up getting a little bit forgotten sometimes, I think, in these global tales. But it's actually, back to what Anna said, LatAm does it best when it comes to producing some of these world-class winners that really do compound returns over a very long period of time.
Julio, that's great. You mentioned, Nubank, one of Sequoia's best investments, but I don't know, I might take it a step further and say that it could be one of the largest or the largest global venture outcome of the last 10 years, right? Tommy, my partner at Latitude, he wrote a little tweet about that, I don't know, a couple months ago. And I love the triumphant three. So we're kind of taking a page out of the Magnificent Seven, and we've got the triumphant three. Let's run with that, right? Let's hopefully equally to the US Magnificent Seven. That's changed over time, right? You had the Fang, and then so there's an evolution. So hopefully the triumphant three will expand its horizon a little bit. That's the hope, right?
Yeah, and I think a lot of the theme of the report is kind of what were the conditions that led to the rise of these triumphant three, and really why are they world class? I think folks often say, "Oh, Latin America can't produce big returns," right? But Mercado Libre now is the largest company in all of Latin America. It's worth $108 billion in market cap. So I think it's hard to argue that there isn't scale there. I mean, Nubank, like you said, is the biggest digital bank in the world, but it's also a $70 billion publicly listed company, that was started, or scaled really in this last decade. So one of the best venture outcomes of the entire world holds true. And I think that the theme of the report is, look, these are the three top companies that this last decade or so, I think since you and I, Brian, have been active here, produced. And the report is like, where are the next three going to come from? Right? Where are the next triumphant three going to come from? Because if we do go back to the Atlantico index that you mentioned in the beginning, we still have probably 10x of growth in terms of market value being created here over the next 10 to 15 years. So a lot of the exploration that we do is what combination of factors will produce the next triumphant three in Latin America.
Yeah, or maybe we'll just call it the Fab Five or something. I don't know. We'll see. That's a little basketball reference for those listeners. That's for my own enjoyment. One quick thing I want to highlight is I heard that $108 billion market cap. When I hear that, I actually just got thrown back into a funny evening that we had. I don't know if you remember this. I'm sure you do because it's unforgettable.
No, I know what you're talking about. Yeah.
At Yuri Milner's house, right? This crazy, speaking of 100, probably $100 million house in the hills there. And, this dramatic setting. I think it's kind of fun to share here with everyone else because it's such a crazy scene. But we were with a bunch of Brazilian entrepreneurs, mostly Brazilian entrepreneurs. And we show up and there was 25 or 30 founders or maybe less, 15, 20 founders. And it was Yuri Milner's house from DST. And we walked in and there was all of these images of Brazil. We get there and then he had us do an exercise. I don't know if this was something that you had cooked up too. I think it was, where it was if we can imagine who's going to become the $100 billion company, right? And then we all wrote down, and he was basically just kind of cultivating lead gen of who should I bet on? And all the founders are collectively voting on who's going to be the 100. And it was, Nubank and Meli were the names that came up, but there was a few other names that came up. And so it's kind of funny to think about that exercise because what year was that? I don't know, 7 years ago?
I think it was 2017 or 18?
17, 18, yeah. So anyways, it's funny because I remember him saying that and there was a couple gasp in the room because he was there will be multiple $100 billion companies, so dramatic. And you know what? Here, it took us 7 years. First one to cross that mark. Nubank is knocking on the door, right?
Actually, it was 2019. So it's actually less than 5 years ago. And I think it felt to all of us in the room like 100 billion. It seemed like a completely crazy number, that Yuri was throwing out.
And then at the time, I was trying to be optimistic. I think, I probably threw in the merger of Viva and Zap just as a make sure I let people know I'm thinking big, even though that was not on the horizon. So it's incredible. 5 years ago, what's happened in that amount of time. And this is the reality of leveling up, right? It's when you think about something and then you're this is a big goal. And then all of a sudden it happens. And then it's what's the next level, right? Speaking of levels and going back to your opening statement, Anna, about Latin America hard mode, if we're playing a video game, there's hard mode and then there's Latin America mode, right? But once you get there, it's really hard to get knocked off the throne, right? Once you're leading. So I think that's something you guys have really articulated well in this report, that if you're listening to this, you should definitely go and download it right now. because there's just, nuggets of information about synthesizing the market. So we'll include that in the show notes so you can make sure you get your hands on a copy of this. You mentioned Mercado Libre and iFood attack these fragmented e-commerce and food delivery, thinking of founders who, are dealing with fragmented markets of their own. That's an opportunity. What would you tell them based on these stories as you get the lupa out and you look a little closer at these companies?
Yeah, and I can take Mercado Libre and iFood because I think you're right, where it's kind of fragmentation, right? And a lot, I think, of what digital transformation or digitalization of the economy means is taking these fragmented and to some extent disorganized and inefficient markets and using technology to organize them and turn them more efficient, and in so doing, growing the market drastically. iFood is clearly that, right? Food delivery has grown, 10x from when it was you calling the restaurants, right? And that's a lot about this coming from convenience, efficiency, and then therefore market growth. I think Mercado Libre also has really been able to kind of grow, both brands that are able to grow off of that ecosystem, but I think retail in general by making both the kind of first party sales and the managed marketplace section is really important. And I think that when you think about what these folks have done is that they've really been able to build out these very, very valuable ecosystems. And I'll take Mercado Libre because I do think it's a very, very unique situation where you have a company that is generating, tens of billions. I think it's 50 or 60 billion dollars of commerce GMV a year. But even when you look at now the financial services arm, Mercado Pago, nowhere in the world do you have a marketplace or e-commerce player that has such a big and meaningful and integrated financial services offering. So it's really a huge enabler. And just to give you a sense of the scale of Mercado Pago, if you look at actually the profits of Mercado Pago in Brazil alone, they're already bigger than Stone, which is one of the big public fintechs that went public in Brazil, and PagSeguro, another big public fintech in Brazil, combined. So that's one of their arms. The other thing that they have is an amazing kind of in-house or proprietary logistics infrastructure. They invested heavily in CapEx, especially during the rise up of e-commerce penetration during the pandemic, and now are able to take one of these weaknesses or challenges of operating in Latin America, like Anna mentioned, sort of this lacking infrastructure and low quality logistics, and they're able to build that out in-house and actually turn that into a competitive advantage. So back to how do you look at these faults in the market, solve these problems, and therefore leverage that as an advantage to keep your profitability and keep your market leadership. I think in addition to that, you now have Mercado Ads. They have a massive advertising business today that has been growing incredibly. I think it's on the road to generating something like $1 billion of revenues this year, or very close to that, and probably will be $1.5 billion to $2 billion next year. Again, to give you some sense, this sort of side business of Mercado Libre, the ads business, is bigger than Global's advertising revenues. 100-year-old media dominant empire of Brazil. So it does put into perspective just how powerful these technology companies are. iFood, same thing, right? They're doing tens of billions of dollars of GMV. They're now offering payments through their platform. They're going to offer financing, and they're kind of starting to go into these adjacencies, because I think market dynamics, when I talked about it, isn't just about your ability to capture really great margins, but it's also your ability to leverage the fact that there's low competition in adjacent markets and go on to conquer those adjacent markets and actually build businesses that are much, much bigger here than they could be in any other country in the world.
Oh, that's incredible. The fintech enabled marketplace of Mercado Libre is just it's just insane when you look at it, and it's pretty cool to see what Fabricio has built over at iFood, and now he's leading Prosus, like $100 billion company in its own right, probably, right? So Anna, talk a little bit more about Nubank and what makes Nubank unique.
Yeah, I mean, I think Nubank is really interesting because it's the circumstances that made Nubank great were quite different from the circumstances that made Meli and iFood great. And I think Julio talked a little bit about this kind of Meli and iFood. Both businesses benefited from a few kind of set of factors that were quite similar. So there's kind of this first mover advantage. There's the network effects that are inherent to this marketplace model. It's fragmented industries where competition is lower, and there's a really big need for digitalization and organization. And I think Nubank faced a very different set of circumstances. I mean, I think a lot of people know this, but at the time when Nubank started, Brazil's five largest banks held 90% of the market. They were amongst the most profitable in the world, incredibly difficult to displace, massive distribution, right? And concentrated markets tend to have a few different dynamics. So one, they're much harder to penetrate. They're concentrated because the barrier to entry is much higher, right? So there's higher competition, higher barrier to entry. And I think two, you're more subject to the innovator's dilemma, right? Where if you're a startup going into that market, you need to crack distribution incredibly quickly before the incumbents innovate. And I think that's exactly what Nubank did. So Nubank cracked distribution really early on in its history. It was both kind of a product strategy, right? Where at the time, a lot of people think that Nubank's first customers were unbanked customers, but it was actually kind of middle class people that had access to bank accounts, but never had access to the level of customer service and of product experience that Nubank offered. So it was a free credit card. You couldn't get that before, right? It's like low friction onboarding. Eventually, it was fully digital. It was just a 10x better experience. It's like an interesting fun fact. Nubank's like customer service agents were amongst the best paid people in the company back when they started. So it was just a level of experience that was 10x better than what existed, right? And then the second thing was the distribution strategy on itself. Like Nubank had almost a fully organic distribution strategy from the get-go. It was mobile referrals. Still today, they acquire, I mean, this was back in early 2023, but I think that probably still holds true today. They still acquired kind of 80% of their customers organically. So you see kind of that distribution, even if you don't have the same type of network effects that Meli or iFood has, kind of how that compounds over time, right? And then I think the other thing that's important to note is that because these markets tend to be really difficult to penetrate, regulation tends to play a much bigger role, right? And we saw regulation really pushing Nubank forward. Saw a similar dynamic with Stone and PagSeguro when 90% of the market belonged to Redcar and VisaNet, and regulation really played a crucial role. So I think for founders that are going towards attacking more concentrated markets, I mean, financial services looks very different today for consumer, right? Like Nubank was the right company at the time that Nubank started. Today, it's a much more competitive market. But if you take those lessons from the past to recognize what in the world is changing today, where are those gaps in the market where you can find these similar dynamics, there's plenty of opportunity. And then you can kind of take advantage of that, find something that you do incredibly well in the beginning, and eventually expand to the ecosystem of services that we actually see across these three companies, right? Both like Nubank and Meli and iFood. So yeah, that's maybe the kind of few differences that I would point out of like Nubank's success versus Meli and iFood.
That's awesome. I think that any of us would have been love to be an investor in any three of those companies, and hopefully this triumphant three expands to Fab Five or whatever we want to, the spectacular six. I don't know. We'll come up with a name as we see growth over time. It's inevitable. It's just a question of when that happens. But let's switch gears to the investor side, and I know that you've worked together with Spectra Investments, who's a funds and an LP in a lot of funds in the region, and you showcase some data on how Latin America VCs have a disproportionate share of the top 25% and top 5% funds globally. Do you think that it's related to this winner takes all phenomenon we just talked about? If funds bet on these companies, are they seeing better returns than global benchmarks for VCs, given that, there's still a lot of question marks around exits in the region?
I think it's a good question. And I think there's a few factors at work. The first one is just a portfolio view of what I described, right? You have in technology an aggregation of wins for the winners, and you have that exacerbated or compounded by the fact that that's also the case in Latin America because of the scarcity and cost of both human capital and financial capital. So you just have greater concentration, winners winning bigger, and who backs those winners as investors winning bigger. So I would say it's not surprising to see that the venture capital funds that are active in the region have performed really well because of those underlying structural factors. And I think that because of the historic low access to capital, it also means that you have few funds that have been active over the last, call it, decade plus in Latin America. So in the same way that there's low levels of competition or comparatively low levels of competition for startups, there's also comparatively low levels of competition for funds, which means that those great returns, they also get divided amongst a smaller number of funds. And obviously there's funds that perform better than others, but in general, if you're dividing up all of this market cap over, historically 4 or 5 funds that have, significant scale here, all of them, even if you're just throwing darts at the wall, are bound to get into some great investments and have really great returns. So we see that in the data. It's very objectively true. And this is data that we looked at since 2012. So it is long-term data over 40 different funds. We actually had access to something like 70% of the capital deployed locally. So it's very, very representative and includes all the big players in that data that I think all the data was provided to us anonymously. So we were able to cut it in any way we wanted. So that's one interesting thing that we've seen there. I think the other thing is not only do you have these really big outlier outcomes, but actually if you look at the global top quartile, which I think is what oftentimes limited partners, the investors in funds look at, it's over 50% of funds here are top quartile global venture funds. So it actually goes deeper in terms of the concentration of high returns that you've had historically in the region. And then I think you have this question about realized returns versus paper markups, right? Sort of DPI versus TVPI, to use a little bit of the industry lingo. But if you actually look at the funds that have had enough time to mature into DPI is also performing at global world scale. So it's not that we've had difficulty in realizing returns. And, the fact that all these companies that were mentioned, they're all US listed public companies. In addition to that, you have other ones that went public in the US, whether it's, dLocal out of Uruguay or Vtex and Stone and PagSeguro, all these guys in Brazil. You also have, nearly 24 technology companies that went public in the Brazilian stock exchange in Sao Paulo. So we've historically seen actually big realized exits of companies going public. You also have big M&A outcomes, right? Like you better than anyone else know that, it's possible to return really great returns to investors with, Viva Real and Zap, and eventually that being a huge M&A outcome. We had just last year Pismo being bought for $1 billion by Visa. We've had Corner Shop being bought by Uber for, I think, $2 billion plus, right? And that's a Mexican-Chilean success story. In last year's report, I want to point something out because I do think that Latin America gets a little unfairly punished for this. But when you look at other emerging technology ecosystems, and here we picked out India and Southeast Asia, Latin America had less than 1/20th the access of venture capital dollars in someone like India. Yet we've been able to produce more $1 billion plus realized outcomes in India and Southeast Asia. And we've been able to produce a higher amount of aggregate market cap than those markets. So in reality, we've been able to show that we can deliver more results with less capital. And these are not paper results. These are realized results.
LatAm does it best.
There you go. You got it.
I'm a quick learner, Julio. No, that's really interesting that you're able to. I mean, I think that the DPI piece is great. For those that don't know what DPI means, it basically means distributed to paid in capital. So like the money you return back to your investors. It's phenomenal to hear that analysis, and it's great to get that level of detail anonymously from Spectra because I know they're LPs in many funds, so they do a lot of data collection, and for you to dissect that and then be able to map that and compare it with other ecosystems is, we punch above our weight, basically, is the summary. And it's an underfunded region. I want to talk about AI because it's the topic on everyone's mind. I know that you spoke with our team a little bit more about our deal flow and what we're seeing, and that there's been 2x in terms of volume of AI companies. When I say AI companies, let's take a step back and, bucket them a little bit. We've got AI applications, which is the application layer. We've got the infrastructure. We have the AI language models, and then there's AI hardware, think, silicon and devices. So we're not really seeing much at the bottom, obviously. That's pretty non-existent in Latin America. But as we go to the top, more on the application side of things, I think we saw an increase from 12 to 21% in our deal flow, so almost doubled the number of AI companies. So can you share a little bit more about how communities in the region have been using AI tools at a higher rate also, and share a little bit more, when we look at the global average,
Yeah, so I think that to dig a little deeper on the point that you mentioned, we're seeing at the seed stage, or call it the very earliest company formation stages, something like 1 in 5 companies be kind of an AI enabled company. I think that, Latitude both this year and last year has been a really good research partner for us, because I think it's very representative of what's out there in terms of deal flow. So we've used that, but when we speak to other seed funds, the number is roughly that, right? It's like 1 in 4 companies is AI. And that's kind of, that number is probably closer to something like 60% in the US when you look at kind of really early stage qualified deal flow. So again, the US has started earlier and moved faster, but I think we know where this is going to end up. I wouldn't be surprised if next year we're looking at, around 50% of deal flow being sort of heavily built on top of AI or enabled by AI. So one part is company formation and investments. I think the other part is, okay, now a lot of these capabilities around, generative AI and a lot of the new models are now being incorporated by existing startups or existing technology companies or existing traditional companies. And we also every year go out and do a big, research study. This year was, I think, roughly 130 companies that participated in it throughout the region. And amongst many other questions that we asked, we also asked them how they're thinking about AI, how they're incorporating it. And we had already seen some research that we actually include in the report this year, I think that IBM ran, that does show that actually, Latin American companies have been at the forefront of adopting AI sort of for day-to-day tasks. And we have sort of that comparison against global benchmarks. So, that's interesting to see on a traditional company basis. But then when we looked at technology companies, we also see what I would call the low-hanging fruit, right? So it's, are you using AI for software development? And it's, over 80%. Are you using AI for customer support? It's around 2/3 of companies. And all of these things where it's kind of very clear that AI should be done for anything that's conversational, for anything that's content generation, whether it's an image or whether it's text, and anything that's sort of around software development as well. And then I think it starts reducing in terms of like maybe more frontier uses of AI. But we also do see that roughly about 1/3 of the companies that we interviewed said that either their core competitive advantage is entirely dependent on a capability that AI has brought to them in the last couple of years, or they are a company that can only exist because of the fact that AI exists. So it's already kind of 1/3 of the respondents are AI enabled or seriously AI powered. We still also ask them, are you using it more for cutting costs or for generating revenue? Still, the former tends to be the most frequent use case. So it's more companies using it to reduce headcount. A lot of stuff that people were doing, typing in things on a computer, and now the AI can do better, faster, cheaper. But we do see also a significant number of companies starting to look at market expansion. How do they, convert more in a sales funnel? How do they improve marketing? How do they potentially reach new customers that they weren't able to reach, whether it's in different markets with different languages or different products that are all AI enabled? And we're seeing kind of really big jumps in that, which I think is very encouraging. So that's all this is how good and exciting AI is. We asked founders, they overwhelmingly said that they see AI as a transformational force in companies, and also in a bit of this tension, I think, between founders and investors, where founders say, look, we are very excited, but we do feel like the expectations or hype, let's say, is still outpacing what we think is realistic to deliver at this scale and in this timeline. So I think it's very, very easy, I think, a lot of times for us, investors to listen to a clever podcast or read a cool TechCrunch article and be like, oh, we all on this call know that kind of reality is a little harder for things to be in place. And I think we're hearing that from founders, where investors are maybe asking them for a little bit too much, a little bit too early. So even though it is having a big impact, I think there's still a little bit of a gap in terms of the expectation and the reality of where these capabilities are today. I think it's going to catch up over the next couple of years, but I do think that founders are still feeling that there's a little bit too much hype right now in what the expectations are from the market, perhaps.
Ana, Julia, I want to wrap up this episode with maybe you could reflect on sharing one fact that surprised you the most when researching and writing this report, something that everyone should definitely kind of look into or check out more. Ana, why don't you go first?
Yeah, I was talking to Julio about this morning. I don't want to sound that I didn't know that Mercado Libre was massive, but I really couldn't comprehend how massive it was. Double clicked on these numbers to think about kind of this whole theme of Latin does it best, like does it really, you know? And when we double click on the numbers, it becomes really clear. Mercado Pago, which is their second business, you know, it's very embedded in the e-commerce experience. It's the only place in the world where we've seen this happen in that level of integration between these two products. And their profits in Brazil only are bigger than those of Stone and PagSeguro combined, which are some of the kind of bigger outcomes that we've seen in the region, right? And ads, which is their fourth or fifth product, Julio mentioned, it tends to be bigger than Global, which is, you know, a multi-decade media company here. So I think it's just the fact that this is a business that's traditionally incredibly difficult, traditionally not a great business. I mean, e-commerce is a very, very hard business, especially without scale. That started in e-commerce and then bred this really unique ecosystem around it and generate massive value. For me, it was just really surprising to see those numbers right in front of me. I hadn't seen them before.
Julio, what about you, man? What strikes you the most after working on this report, and you know, what maybe surprised you?
I'm going to say two things. I'm going to cheat a little bit here, but when we look forward, when we think about where are these next three, triumphant three, going to come from, I think it's not one single place, right? I think it ends up being what we called in the report, to steal the title of a famous Oscar-winning film, everything everywhere all at once, right? So it's, you take AI, you take, you know, WhatsApp penetration, you take Pix penetration, you take all these things, kind of mix them all up together, and you can really count on entrepreneurs to come up with creative new business models that are going to be these great transformational companies. So it's really at the intersection of what last year we call these tectonic shifts in the market that I think these really revolutionary and great new business models are going to come from. So just seeing how creative entrepreneurs have been able to be was amazing to see, the intersection between these different themes and different sectors. And I think in fintech in particular, it's amazing to see the power of regulation as a tailwind here. And those are, you know, almost paradoxical terms to think about, but really a lot of it has been the regulator, a lot of it has been the government, you know, laying the groundwork for this super powerful digital public infrastructure around financial services, and how that has sprouted amazing competition and amazing increases of quality and accessibility for the population as a whole. So looking at actually how the regulatory map has led to innovation, and then actually forecasting that and looking at what's to come in terms of regulation and what innovation could come alongside that was, I think, very eye-opening for me, and helped crystallize the opportunity that exists. And when we looked at the area of energy, which is something that we don't talk about that much, you know, we saw just in these last 5 years since we launched a report, distributed generation from solar grew 10x in Brazil. And again, energy is a very heavily regulated market, and it kind of gives us a little bit of pause to think about, look, the regulator here is also, you know, very progressive. I think maybe not as much as financial services, but maybe there is an opportunity for us to be able to be a world leader again in clean energy and sort of the transition to sustainable fuels, and can regulation provide that same tailwind that it did for financial services? So it's another area that we continue to be very optimistic about.
Yeah, if I think back to 15 years ago, landing in Brazil, dreams of starting my own company, and you were to tell me that the Brazilian government is going to be a factor in terms of creating tailwinds for tech, sobretudo financial services, I definitely would probably pause and question your sanity. But the reality is that's happened. So it's been demonstrated. As you said, hopefully there's other additional tailwinds that can be created there. Well, listen, if you're listening to this podcast and you haven't downloaded the report yet, you should. How can people access the report, Julio, Ana? Where can they read about it?
The easiest thing is always just go to our website. It's atlantico.vc. You'll have an easy link to this year's report as well as all the past ones. You can download, you can share it with your friends, and feel free to also kind of write us and share some feedback. That's always how we get things better year after year.
Well, congratulations on another successful report. Congrats to the team, all the hard work they put into this. I know it's a labor of love for everybody at Atlantico and the partners that you guys work with, and you do it beautifully. So thank you for coming on and sharing some of the highlights with our community. And I think you said it best. LatAm does it best. Thank you so much for coming on here and sharing, and excited by those future returns over the next 10 years, right? Looking back over the last 10. Let's keep it going. Thanks so much.
Thank you, Brian. Thanks for having us on.